Thank you for joining this session, which I'm sure it will be very exciting because I have a tremendous panel here joining me. So we want to talk now about what are the challenges that the traditional banks and the traditional financial services and financial institutions are facing with the challenges that the fintechs and the digital banks are bringing. And as I said, I have a panel that has very different experiences. And I'm going to let them introduce themselves because I'm sure you will do much better. And particularly, you will spell your name much better than if I do it. So can we start with you, Samir, please?
Thank you. Hi, I'm Samir Ghuge from Fiserv, looking after strategy and planning at CEO's office. Pleasure to be here.
Thank you, Sankar.
Hey, Shankar Krishnan from Capgemini. I have responsibility for digital assets globally.
Hi, this is Wadhwani with Cetera Financial Group. I head up the IT strategy and architecture.
Thank you. So I'm going to start with you, Raj. We know that in the last years, we have seen a tremendous change on the business of the banks and also on the customers and the expectations of the customers, particularly after the last 2 years in which the pandemic has accelerated the digitalization of absolutely everybody. So could you tell us a little bit what are the challenges that you have seen and how you have seen the technology playing a role, either positive or negative?
Yeah, so I've had over 15 years experience in the banking industry, retail banking industry. So let me just walk people through the memory lane of how the retail banking industry has evolved. All of us have a savings account, checking account, credit card. If you think about it, the savings and checking account has remained the same since the advent of banking. 200 years ago or more, it still used to be savings or checking accounts. The difference then versus today is banks were like a fortress. It used to be a huge effort to go into the bank. The banking was meant for very few privileged in the society. Today, the bank has come to your home. The banking is meant for everyone. And we'll probably get into more talking about how the banking is going to the masses. We probably don't see as much in the United States when we talk about banking to the masses. But when you step out of the United States, you go to Central America, Southern America, Asia, India, China, you will see how banking is proliferating to the masses. And that's really making a difference as to how banking is evolving itself. A lot of learnings are coming from what the customers are demanding. And it's really about customer experience and customer service and less about the products.
Thank you very much. Samir, we were talking before the panel, and you made a distinction, very subtle, and you said, now banks don't have customers, or they have customers, but they have consumers. Could you elaborate a little bit about this difference?
Yeah, so we, like Raj was mentioning, we've evolved doing banking as a customer. Bank always call you customer. But the way now we are evolving with all the technology changes and the way we consume technology itself, we have become more of a consumer. We act as if we are surfing on internet when we are banking. So we make split-second decisions even to make a trade based on our cortex, frontal brain rather than analytics thinking. And that changes a lot. So that makes you that if you are pushed information that is available for you to make a decision, you can prompt what we call in the digital world next best action. And that next best action is converting a customer into a consumer. And if you continue that, it's like a 30-second video you watch and you keep watching because that's the max attention you're going to pay. And that's changing the behavior of a customer into a consumer, which also leads to a change habits. So it's like a habit formed, and once a habit is formed, good or bad, it's very difficult to break it.
Yeah, Samir, I experience myself as a customer or as a consumer that anything I get good from, let's say, Amazon or any other, or even Netflix or any other online experience that I have then I expect everybody else to give me that high level, no? So is that a little bit something that resonates with what you say?
It does, and that's the reason I said customer is behaving like a consumer, because if you look at all the data technology, it came out of retail market. It did not came out of financial institutes. Data analytics came out of the retail market, the consumer market, and then financial institutes adopted.
Do you see a difference between generations, like young people,
I
older
think
people?
more and more with pandemic hitting us and operating in a remote environment, people are reluctant to go because now you are working remote. So you're not going to your office as much as you used to. So you have limited time to go and do any physical transaction or any physical interaction with your financial institute.
Sankar, being at Capgemini, you are a provider of technology and consulting. Having listened to these changes, what are the advice that you are giving to your customers to face these challenges?
There's many, but most important was a continuum from the last conversation the last panel had, which is the legacy transformation. Again, oftentimes when we talk banks, we fail to recognize there are smaller regional banks, credit unions, and so on. So legacy transformation is extremely important to get done. I think everyone has a duty to do it, to look at the entire app stack and tech stack and say which one is working, which has a lot of knowledge management that you want to keep, equally which is not good. So there's a lot of technology like Sybase and COBOL and these kind of things which were great when they started. But right now, a lot of the new talent works to work on DeFi. They want to work on digital assets. They want to work on blockchain. So if you keep having that legacy the way it is, you want to attract the smarter people to join your organization. In fact, turnover in most of the industries approaching 40%, that will even be higher. So I think it is very important to kind of box in legacy and have a plan to kind of convert it to the new, even before you're thinking in terms of should I move it to the cloud, should I move to the blockchain? Should it be crypto native or should it be a digital wallet? I mean, all these are good outcomes, but if you don't transform your legacy, you're dead. So it's extremely, extremely important to start there. And the good news is you can do that today for a lot lower cost than it ever existed, thanks to all the APIs. Like Capgemini, for example, has a fund. I know, all the other sponsors are in the same industry, and every time we do a renewal or a big deal, we have to commit a certain part of our, revenues into transformation. And this could be a good area where the whole industry can look at it as helping customers transform. And there is enough money to do that, both from ventures, from hyperscalers, and so on.
Yeah. But Sankar, if, as a bank, I know when I work at the Inter-American Development Bank, and I know how much it costed to just to replace the loan management system, right? It was a couple of years, maybe a bit more, a lot of money. So what you're saying is you need to encapsulate somehow your legacy, and you need to move into digital. But we are facing a very difficult labor market where it's very difficult to get IT skills. Exactly. So any recommendation for the CIO or somebody responsible to have?
So I think, look, the pockets of talent are limited, and they are not equally distributed across all locations, right? So, I mean, not because I'm from New York, but I would like to think that New York, New Jersey area, California, few parts of the country have more talent. I agree there is migration. So I think if you look at the sponsors of this program, I think each of them is doing a great job in terms of making sure they load balance it right. So let us look at something like trade finance, right? I mean, it was there for 300 years, those rules, and I was a head of trade services myself at one point, but I'm not as good as what I was when it comes to processing a trade finance or a trade services transaction. So talent of this is limited, and a lot of that is retired, it's dead, it's so on. So it's extremely important to gather these skills in places where they're available, like India or Poland or Asia, and kind of make that available on a global basis. That is true of the traditional technologies, but yeah, when it comes to the US, a lot of the things we do in digital assets, DeFi, most of that work is done here in the US, supported by India and a few other locations in Europe. So it depends on which app and tag, but yeah, absolutely.
Yeah, no, it talks a lot to some of my experiences, because in Latin America, the Inter-American Development Bank was pushing for, and I know Avasant is very active also, in training people, because we have a lot of people available, but they don't have the right skills, right? So we really need to, as a society, both academy, companies, institutions, we need to make sure we develop this talent. Raj, moving into social impact. So for me, social impact is very important. The last 7 years, our mission was really positive social impact in Latin America and the Caribbean. It's still in my heart. The digital divide is, has been a little bit mitigated because of COVID, but still is there and is an important problem. So how do you see the social impact of this tremendous challenge of the banking industry?
So I think it's the social impact that is transforming a lot of banking. When I talked about Central America, South America, Asia, it's really the social impact that's transforming. So I'll share an example. I was recently in India and I was on a highway in a rural space and I wanted to have a coconut. And we stopped the car, we bought the coconut. Of course, I didn't have the Indian infrastructure for paying digitally, so I paid with cash. But the customer next to me just waved their phone, and there was a board that came up, 30 rupees paid. Right? This was all QR code. It was all seamless. I think in the United States, we hesitate to use our phone as much. But if you go again, I continue to talk about even South America, Brazil, Argentina, Costa Rica, in Asia, I would say Philippines, Thailand, China, India. It is really the social divide that is driving the adoption of technology in banking. And you'll see a lot of things are innovating in the payment space because that's where the banking can go at the grassroots level.
Thank you. Samir, many of us are technologists and have followed very closely the development of blockchain, cryptocurrencies. But I know that you think that blockchain has an important role. Tell us about the opportunities and the challenges that blockchain brings to the environment that we are talking about.
I think every time I talk about blockchain now, I get either some yes and some no's. and my mind goes back to the internet clip that we all have seen. What's internet and would it exist? And I think blockchain as a technology is at that cusp. We will evolve. It has its challenges and opportunities. I think opportunity-wise, many of us have started to use closer technology to blockchain in a wallet format without realizing it. And I think Apple Wallet is a great example. Google Wallet is a great example that we have moved towards that kind of mind share without realizing it. We have our boarding pass, we have our sports events tickets, we have our bank cards, all into single wallet. And that's very close to what blockchain is going to do to our lives in future. It's more secured, it's more secured and safe, and it's better organized. It also brings its own challenges. As I said, we are evolving. Internet is no more what it was 25, 30 years back. So where we are in blockchain, I don't know what end up, but today we have challenges like regulatories. We don't know how to regulate it because it's so new. We don't have enough technology stack or technology talent available because everybody's learning it on the fly, which also brings problems of, is the design perfect? If the design is not perfect, then it may have loopholes. And one such scenario at either a digital wallet or a digital exchange create or have of perception that, oh, this is not safe and secure technology. Then association of it with criminal activities and all other power consumptions. So there are challenges that we all will have to work together. But I think from opportunity perspective, if you ask me at the last is, there are a lot of, there's a term value for money. I think value for effort is lacking in blockchain environment today. Yeah. When it comes together, we will be able to eliminate lots of utilities that today might be wasting organizations' money and social, economic industry interest.
Yeah. So what do you think that let's say the traditional banks going into a digital bank type, should they do with blockchain? Should they embrace it internally? Should they rely on the technology providers?
I think it will be crawl, walk, run journey for all of them. Every change comes out with a change management mindset and a change ambassador. And more, I think there would be leaders, there would be peer pressure followers, and that would evolve this industry together.
Thank you. Raj, back to you. You had very interesting views about fintechs when you and I talked a few days ago. Could you share with the audience how do you see the fintechs going from a challenger or a niche player in relationship with the traditional banks becoming digital?
Yeah, so this is really, I'll put the disclaimer, this is just my perspective, right? If we just talked about banking, recall how banking evolved, right? It was a place where you deposited money, and by the way, they will give you checking services, and by the way, they will charge you for that. Or when banks came up with a lot of automation, the idea there was that you would do the work for the bank, right? It was not that bank was really giving you service. We heard about ATMs earlier in the session today. ATMs have served its purpose, right? In my view, it's actually a declining phase for ATMs, and similar to what happened with cell phones. Cell phones came out in 1973. It took good 25, 30 years for the pay phones to go away. ATMs is really on that journey. They have lived their life. They're on the decline. And what we are now finding is that the fintechs are tagging on to, as I said, payments, for example, because that's the easiest thing to tag on to. They are tagging on to payments. They're able to remove the friction from the payments. And now guess what? They're saying, we will integrate backward and give you deposit capabilities. We will give you wallet capabilities, right? So fintechs are really evolving from a consumer or customer in mind and looking at where the consumer or the customer is having friction. Now, large banks are, I think they're recognizing it. They are evolving. They are, being in Bank of America for many years, I can tell you we evolved from being in silos, and nothing against Bank of America, because that's how traditional banking was. That's how we acquired a lot of banks. But we transitioned from operating in silos to be able to provide a seamless experience to all our customers, right? And so in my view, ultimately, the fintechs and the big banks have to come together on a common ecosystem where they can, plug and play. They could interchange itself. There may be areas, such as Zillow, that could bolt on to Bank of America Mortgage. Bank of America does not have to go into the Zillow space, right? So there are a lot of consumer-based utilities that have, hooks into banking, that large banks can actually partner with fintechs and not necessarily compete with fintechs. So I think it's going to be both. Fintechs will be challengers, and fintechs will also be partners with a lot of banks.
Yeah, I want to pose a question to Sankar, and I may go back to you to ask you how this marriage of bank and fintech, how do you assess a good match? But I'll let you think about it from a fintech perspective and from the bank perspective. Sankar, with this scenario that he's describing, for me as a CIO, it's like a nightmare. So if I have to integrate, I think the other day you mentioned hundreds of fintechs, maybe I'm exaggerating. From an architecture, portfolio and architecture perspective, it's a nightmare, no? So how do you recommend companies to go about it?
So I'm going to be a little controversial. We are with friends here, right? So look, in full disclosure, I make a living selling to banks. So I don't want you to think I'm the smart guy in the room or anything. I think all the things we are discussing are here. They were here 5 years ago, and things are there. So when there are only 2 million Bitcoins left to be mined, and 200 billion of Ethereum has already been mined, I don't think we should be focused on, are these going to be relevant? They are here. With or without us, they are going to take over. Just like the government tried to stop Uber in various countries, the consumer revolution, favoring it was so high, no one could stop. So people in this room may believe, people in this room may not believe, but those things are going on. Now, the question of banks and fintech, I think banks have to do a better job when it comes to dealing with the fintech. I'm on several fintech boards. Banks still, the head of vendor management gives a 250-page whatever to fill out for a 2-man fintech with a 4-man operation. That is not going to work. So I think they have to come up with unique ways in which they can onboard fintechs. We published the World Fintech Report, and that clearly shows that banks have a long way to go. And not that they don't know, they're just busy with other things. They have to change their methodology when it comes to dealing with fintechs. The fintech also should realize, depending on the bank, how to make it more easy and collaborative. Fintech should also realize, look, banks are taking a risk if you don't expose your code and if you don't give them guarantees. As a response to all of this, Capgemini came up with a scale-up certification. So whether it is a startup, we wouldn't rate it, but once the startup becomes a scale-up, we would give it a seal of approval, platinum, gold, silver, and so on, and publish the criteria. So the fintech would also be able to go and get funding. And the days of collaboration are here. Stripe is valued more than Goldman Sachs. So I don't know what we are talking about. I think it's here and go. So collaboration is the way to go, and that's the future.
Yeah, no, I fully agree on the need and for collaboration. But I can tell you for experience exactly what you said in my institution. It was like if we put a startup in general, because it was not just fintechs, we had a lot of social stuff. It's like they cannot respond to our procurement processes, right? But the other aspect that worries me is how do you analyze and value which fintechs are going to grow, scale, are reliable. Yeah. So it's a lot of work also for a bank to analyze each fintech that may or may not fit into your portfolio. No? So
yeah, absolutely. And banks are set up those offices, right?
I mean, yeah. So look, banks have deep pockets.
Yeah.
Right? Given a chance, they would partner with a lot of fintechs. And fintechs are bets that the banks are playing because if it doesn't work out, they can always jettison. As Sankar talked about, there is a shortage of talent. Bank can only go after so many things. They have so many priorities. So when it comes to trying to innovate at the periphery, fintechs is a great place for the banks to invest in. I think the big challenge is that the banks are regulated entity and they're extremely risk averse, particularly coming out of the 2008 recession. And having lived through the risk management at Bank of America, banks are extremely risk averse. The 200-page document is not unreal, let me put it that way. It happens. There is compliance, there is information security, there could be different regulatory aspects, depending on what fintech it is. It's not unusual, but that said, I think partnering with fintechs is a great opportunity for banks. And something that has happened in the healthcare industry, think about it. Large pharmaceutical companies and biotech companies have had this symbiotic relationship and a competing relationship for decades, right? A lot of pharmaceutical companies invest in biotechs, hoping that that drug would be a wonder drug, and then they buy up the biotech company. Or if it fails in first review with FDA, they just pack their bags and let it go. And I think banks will have to take that approach. And as Sankar said, it is happening. If you look at the investments that Citibank, JP Morgan, Goldman Sachs have made, they're tremendous. In fact, when I compare to the investments made by large banks in fintechs, I would say Bank of America is way behind because of it being extremely risk averse. Citibank and JP Morgan are kind of leading the pack.
I would like to give you also the chance to share your views on this subject because it's really controversial.
No, I think it is controversial if you look at it from the perspective, but our industry is highly regulated, number one, in financial space. Number two, it's like an uprise tide, right? With the uprise tide, everything flows upward, whether it is garbage or a good surfer. And that's the challenge fintech scenario is bringing. You have millions of fintechs starting across the globe. Everybody's knocking on the financial institutes' doors. How do you filter out what's right, what's wrong, number one? Number two, they are coming with the point solutions, which helps, but also creates the complexity of maintaining it and managing it. Because most of the fintechs also start with the perspective of getting sold or acquired. And that creates a problem that if my competition buys it, how I'm going to manage it? How do I deal with it? But if you look at fintech as in isolation to these problems, and if you look at tools like Zelle, Venmo, or peer-to-peer real-time payments, they have been tremendously successful when the financial institutes have collaborated together and come up with the game plan. Are they perfect? No. But they are setting up a framework that can be followed and borrowed. And I think fintechs would need to come up with some sort of regulatory guidelines on entire process from end to end, from conception to even getting acquired, because that's creating a bigger issue in the industry today.
Yeah, I think that is, it's easier said than done. And I wonder if it will stiff also innovation. The moment you start putting a lot of methodologies and frameworks, you tend to, to kill it a little bit. No? So we'll see where the balance gets on. Anything else that you guys would like to leave the audience with?
On the innovation front, I would say I think connecting innovation with commercialization is the bridge that we will have to figure it out. The challenge is today fintechs are not only innovative, they are solving a point problem to be commercialized. And research institutes are largely into innovation space. And if you talk about biotech, it is successful because biotechs never focused on commercialization. They focused on innovation to solve a particular problem that human being is facing. And that's why it was very easy for pharmaceutical firms to invest into them. When we can start focusing on innovation, like we spoke in the morning session about earthquake being S wave and P wave, then you will be able to solve the problems of those bridges.
Yeah. And to build upon, Samir, what you said, I think when we look at fintech, there are point solutions. Zelle is an example that actually created an industry standard, right? So where a fintech is able to bring the competing banks together, they tend to be slightly more successful because they are now partnering with multiple banks. Versus a fintech that is serving a point solution, does it offer that point solution to everyone? Does it offer it to one? Does it really provide that competitive advantage to one bank who jumps first? So I think to Samir's point, the innovation being able to commercialize, I think that is really, really critical. And that's equally hard in the banking space.
I just wanted to say the cost is also a very important part, right? I mean, Bank of America is a great bank, CEO is doing a great job, but if you look at Erica, the conversational AI bot of Bank of America, it costs like $400 million to build. To the point that he makes, you need 20 people to change a light bulb because of regulation, whereas you can build for $500,000 an amazing conversational AI for less, and that is freely available already. So how do you balance that? So my thing is, the regional banks and the smaller banks that are looking for ways to spend, there are enough fintechs out there that are built something, waiting for opportunities to plug it in. And I know at Fiserv we have done some fintechs that plug in as well. So I think we have to get this done.
I was thinking, I was not here this morning because of some personal stuff that I needed to do. But one of the themes of this event is the Omniverse and all this. So I really wonder how that approach of different verses and everything that we are talking here is gonna come together. Any thoughts?
So what is happening in the Omniverse? We all know how the immersive experiences are happening. So if you go to Decentraland, yes, our friends at JP Morgan have taken real estate and so on, it's still evolving, but the action is with the fashion companies and the consumer goods and the liquor companies and so on that have created an immersive experience. Now, for the financial supply chain and the physical supply chain to connect into the metaverse is not that easy because of the way they work. And so that is going to take some time. So there are some blockchain solutions that are being examined. But then remember, while like Capgemini created this thing called Marco Polo, which is a trade finance exchange, it has over $1.5 billion in transactions, 36 banks and 40 Fortune 500 use that. But again, we are not able to connect that to the metaverse because it works, it's like parallel lines right now and they shall not meet. But once we find the way to connect that, you will see more liquidity into the metaverse and a lot of things will be happening. And we are ideating some of these use cases with Avasant, as you know, so yeah.
Right. Thank you very much. We have a few minutes. I don't know if you are open to receive a couple of questions. Anybody that has a question?
When is the break is the first question, right?
What?
When is the break?
Yeah. Okay, so if there are no questions, I hope I'm not missing anybody. Thank you, everybody, for joining us. Thank you to the panelists. I think we all see that banks are going to have to keep investing in encapsulating their legacy systems, engaging fintechs, putting the customer at the center, and all this work on data and the metaverses and the verses in general. Thank you very much, the panelists.
Thank you.
Thank you.